All right, everybody. Stocks by the numbers, welcome back. And we had a stock that we looked at a while back that was flat, and then we started trending down. Numbers kept coming in kind of consistently well. Now we have a little bit of a rise and a rebound taking place, and the stock, as you see, hit above $70 a share today. We're talking about Roku Incorporated, ticker symbol ROKU, listed here on the NASDAQ. Stock right now about 69 and 3/4 right now, up about 13 cents or about 0.2%. Got up to 70.68 here recently. And we originally looked at the stock. It was after these earnings came out, the end of February. It was right around here. And I said, in my opinion, maybe it could have been viewed as overvalued, so they chunked the stock down. And we can see, though, that the EPS and the revenue has been pretty steadily in line with what analysts are expecting. And you can see how I drew out these support trend lines in the original video, and you can see how much the stock was fighting to stay and retest and just keep this level for literally looks like about 5-6 straight weeks. Then it finally rejected, started to pull back, had a little bit of a bump going into earnings. Earnings come out the end of April, and we have yet again another nice beat on the EPS side, beating by over 40%, and the revenue coming in 881 million off estimates of 843 million. So they beat by 4.5%, and we can see the kind of premature pop out of this wedge that we spoke about on the good news of the earnings. We saw about 66.5, it looks like. Then we trended back down, bounced off the top trend line, and dropped basically right at the apex of that wedge. And then boom, you had a really nice rally from, what was that, about 51 up to about 66. The stock pulls all the way back, and look, let's see, did we meet up with this trend line? If we extend this out, oh, look at that. Comes right down to that trend line and then bounces up. This is why I personally love trend lines. And again, this was looking like the low of end of December 2018. And it was cutting across, yeah, I believe it was like that gap down or something right there where I drew across. And that was the end of December 22 going into January 2023. But you can see again that the stock basically pulled back to that trend line, and I said, in my opinion, this is like the long-term support, and if we did happen to break and drop into the high 40s, this would be the key level to watch for a bounce or a break. And again, obviously it's all hindsight, but we had the big drop going into earnings, and yet again the company beats on the top and bottom line and has been rallying nicely. So as of late, in my opinion, we have kind of a potential flatness taking place off a big run up here. So in my opinion, we may potentially retest this original support trend line that the stock was trying to hold. And if you see, if we come straight up here, you can see we're looking at about 77, 78 and change. So we could potentially see a really nice like 10-12% continued run even from this level of the high 60s, or about 70 cents, $70 a share. So in my opinion, that would be the level for myself to watch. I do personally still think that Roku is growing nicely, and I understand some people, they want to look at the profitability and the drop in net margin percentage. Totally understandable. But again, I say, in my opinion, I basically kind of subscribe to the Buffett method, where you're investing, if we're talking about investing, of course, instead of trading. But we know both are important. But when we look at Roku as an investment, the business itself seems to be growing very nicely over the years. Word of mouth, obviously, spreading very well. Everyone I talk to always mentions Roku. And, I have like one or two older style TVs, and people tell me, oh, just get the Roku box and, upgrade the TV and boom, you'd be good to go. So it seems like they're slowly gaining more and more traction. And that's why I said here and even here in the 50s. Technically, yeah, if I said to buy it here at 62, 64, yeah, the stock went down to 50. So technically, you could say I was wrong, even though now I'm right. And we also have the potential gap fill right here as well. Let's look. The low, $71. So in my opinion, that's probably where the stock will go before a potential rejection. Did we see that? 70.56, 70.48. 70.68. So in my opinion, we're going to fill this gap right here from the initial drop. And also, if all of this was an overreaction, which I said in my opinion it was in the immediate short term, and I did like it in the longer term, this is why I'm saying worst case, back to this line. It might take a while, but it may actually meet up with the top of this candle on the original gap down. And as you see, the high on that candle, 78.61, which is why I'm saying 10, 12, 13% back up to this trend line to retest now. In my opinion, that technically really should be the next stop for Roku. And let's look at the numbers real quick, because we're talking about a $10 billion market cap. The EPS, as you see, they completely turned it around. They went from huge losses to smaller losses to now tightening of those losses, right? We went in line at minus 55 cents a share. Then we reported a loss of 35 on estimates of over 60. Then we reported a loss of less than a quarter on estimates of 42. So if this trend continues, now next quarter looking for a loss of 32 cents a share, this company may post a loss of 20 cents or less. And we're getting closer and closer to that break even and potential net income positivity, which of course would completely reinvigorate the stock and probably bring even more volume into it, because again, they've been growing nicely, but now if they're able to flip from negative to positive, that's going to bring in a lot of new volume into the stock, in my opinion, and you may potentially even retrace back up here to the high 80s and potentially back to the 90s where it was. But look at this growth here, cannot be denied, and I understand, again, the profitability took a hit, 8.7% net margin, down to a loss of 16%, down to a loss of over 20%. But as they say, sometimes you have to spend money to make money. And the growth in the revenue is really pretty impressive. I can't deny them. 1 billion, 1 billion, 2 billion, 3 billion, almost 3.5 billion. And obviously quarterly, we're technically climbing. Look at how the net margin percentage has now completely reversed course. We were minus 12%, took a big drop, and got right back on track, right? And we're continuing this kind of slow and steady upward momentum. And now, as of last quarter, only minus 3.5%. We are much closer than people may think. But we can see also that year over year, the business is growing nicely, right? Q2 this time last year, 847 million. Q2 this year, 968 million. So over 100 million in revenue year over year. And this is what I mean when I talk about the growth of the business, increasing their footprint, gaining more market share, word of mouth business. This is the type of industry that a company like Roku is in right now. And I know people were talking about Vizio and Walmart, and this is why I was saying again, I appreciate the fact that that acquisition took place, so people may have kind of stuck up their nose at Roku. But again, I also feel that when an acquisition takes place, it also shows not only value in that business, but also value in that space, right? Which is why with the Roku TVs and the Roku boxes, I used to look online and I saw the Roku TVs were pretty cheap, and they were kind of undercutting a lot of other products and name brands that were listed on sites like Amazon and whatnot. So this is why I think that the revenue is steadily climbing, and if they keep these losses in check, this is why I'm saying, in my opinion, 100 plus back longer term really shouldn't be an issue. The growth looks nice, but let's look at the quote-unquote fair value of the business very quickly, the way I like to look at it. So overall, this is what? Annual revenue, as you see, beating more times than not, expecting almost 4 billion in revenue now for 2024, going from sub 3.5 billion to about 4 billion. That is a very nice percentage gain year over year. On the quarterly side, you can see 4 beats in a row. The EPS, even though it bounced around and swung negative, it technically is coming in above expectations. And you can see now we're going from a loss of $5 a share to a loss of only $1.40, which tells me that potentially 25 may be a breakout year for the stock and the business, and we may see positivity again, like we did back in 21. But here on the quarterly side, again, 3 straight beats in a row. And if we look at the debt, though, the debt isn't too out of control, right? 648 million up to 663, 654, 639, 627 million. So we've been slowly chipping away at the debt. And in my opinion, free cash flows technically took a hit. 129 million this time last year. Now it's down to about 3 million. But again, to keep the cash on hand, it's holding steady and slightly increasing over time. So that's why the free cash flow swinging around, in my opinion, I don't necessarily view it as a red flag, because the green flag is the fact that they're chipping away at the debt. So, again, I know we're kind of comparing random fundamentals to each other, but again, this is just my opinion, the way I'm looking at it. But you can see the cash right here, the blue bar, 1.8 billion, 204 billion, 207 billion, 2.1, 2.1. So the debt's been going down, the cash has been steadily climbing and holding, and revenue is steadily increasing, right? We have assets outweighing liabilities in both the short and the long term. Also, I wanted to show you, remember when we speak about how sometimes they beat stocks up, if the fundamentals start slipping, they hit these lows, right? It's sub 50, they go out of the spotlight, they stop talking about them. But if the company is able to right the wrongs, they eventually bottom out and then begin that rebound climb, right? That's why I was saying the whole time down at $63, at $54, wherever it was. I kept saying, when people asked me, I said, in my opinion, in the long term, I like it, and it will most likely start to bounce back, and boom, now the stock's back at 70. But we can see that. Look at something like the equity here, right? It was consistently dropping down, and we even had people in the comments section mention that to me. They said, hey, listen, assets, you can see, slowly pulling back, right? Liabilities, holding and climbing. It's eating away at the equity. It's dropping. They were talking about the company operating at a loss, and they were basically saying that the sell-off can continue. And I give them credit, because as we saw in the short term, they were technically correct. But now what you're seeing here in the longer term is the potential bottoming and the U-turn recovery taking place. And with the equity consistently dropping here over all these quarters down to 231 billion, now you can see 233, 236, 239. Now we're starting to tick it back upward, right? Now, granted, our book value was almost 19 a share, and we're not quite there yet, but we were down to 1619, and you can see 1621, 1634, 1652. So this is why I think right now, over the next year or two at least, the growth in revenue should probably maintain itself and continue, in my opinion, which of course would translate to, again, less and less losses, which would of course translate to potential net income positivity, a higher book value per share, and of course higher equity moving forward, which is why I'm saying, again, in my opinion, I do think there's still room to go here. And if we look here, we have equity, we'll call it 2.4 billion. Total debt, 600 million. So if we subtract that, you're looking at, what's that, 1.8 billion? And now let's look at what we did last year, about 3.5, right? So that would bring us to 5.3 billion. They lost 700 million. So that would bring us to 4.6 billion, right? So I did the equity minus the debt, and then added the revenue that they brought in, but they were net income negative. So I subtracted the 700 million from that value, right? So we're at about 5 billion in change. But look also, companies holding 2 billion in cash, right? So this is why I'm saying, in my opinion, the potential quote unquote fair value of this business in the moment could be anywhere from $6 to $7 billion. And if we look at the market cap, you can see we're sitting at about 10 billion. So even if we call it 7 billion, we're trading about 1.5 times fair value, in my opinion, which could be viewed as undervalued. You could potentially bring something, especially the way the business is growing, you could potentially bring something like this up to about 2x fair value, which of course would be a market cap of about 14 billion, which would be a 40% move from this level, which would bring us back to about $100 a share plus. Which is why, again, I'm saying, in my opinion, over the longer term, this stock technically should stay up. And of course, if markets really start to sell off, yes, it can go lower and it can make lows and they can beat up essentially every single stock. if you really look at the numbers, right? We know this. But if markets kind of hold steady, and of course, if Roku doesn't start to lose its popularity and there's no negative catalysts that come out, or, who posted a video trashing them, or, any slight negatives like that. If nothing like that comes out and the company keeps doing what it's doing, that's why I'm saying, in my opinion, $100+ a share from this level. But also recently got an upgrade from Guggenheim, as you see here. It was up more than 11% last week. Guggenheim upgraded the stock to buy from neutral, which technically is a good sign, because again, I know a lot of people were lowering price targets and lowering their buy status really on Roku because of the last couple of quarters. And now even today, you can see $75 a share price target. This is why I'm saying, in my opinion, in the short term, we can easily retrace back to this trend line here. You're looking at about 78 plus. Guggenheim, yep, neutral to buy. We're talking about a bid. We're reading. I think that is pretty... what's this? There's National Amusements. Roku technically holding a couple of billion in cash, expressed an interest in buying National Amusements in June. It was looking to offer between 2 and 2.5 billion. He didn't bid. Ellison. I mean, we know anything can happen, but we also saw as well with a lot of the tech companies that they were holding their value or continuing to climb because during these rough economic times and the high interest rates, we were basically rewarding the tech companies with the widest profit margins and the most cash on hand. And that's why I think that regardless of any losses or any negatives we can say about Roku, the fact that revenue consistently keeps climbing and the cash was climbing and maintaining while also keeping the debt in check. This is why I say, in my opinion, they may continue to climb this and we can potentially retest that trend line. I truly do believe that. Roku maintained neutral. Rosenblatt. Price target, see, cut to 61 from 89, right? This is what I mean. People were much more bullish on it, and now they're pulling back. Obviously, this is incorrect because the stock is now above 70. So, maintain outperform, 72 from 88. See, everyone was beating it up. And that's what I mean. They beat it up. They bring it down. The numbers may look good. Then all of a sudden, the stock sells off, starts approaching new lows. We start to double guess ourselves. We start to question our analysis. We start to listen to some headlines that come out, and then before you know it, the stock that you just cut for a loss at 53.52 now bottomed out and is rebounding and is now back above 70. That's why I used to always say my mantra when I would look at a stock and it would drop down when I saw value. I would always say my mantra to myself that I know what I know, right? And that's why we just kind of looked at the fair value of Roku. And again, 2 times fair value, in my opinion, would be $100+ a share. So in my eyes, until markets really sell off, I'm looking at this as at least a $90 to $100 stock, in my opinion. And we'll check stock charts real quick, and I'll let you go. So obviously, after the run up, the RSI now is above the 70 benchmark. However, it does still seem bullish in my opinion, and we could potentially be setting up another mini little ascending triangle or potential flagging here, and we could see this retest to the 200-day of about 71 1/3. The MACD has been climbing steadily here with these pops. Switching over to weekly, though, we can see the RSI still has room to grow. It's sitting basically middle of the road, 57.5. So we can keep going. And the 50-day moving average, 70.63. Stock hit a high 70.68 and then started to pull back, which is why I say, again, we may have a down day the next day or two with the daily RSI potentially topping out. But in my opinion, the fact that it even got above the 50-day, technically, yes, it rejected. But the fact that it even got above the 50-day tells me, in my opinion, it is actually bullish. And that's why I still say I think we go back to the, excuse me, the top of this gap down, 78.61. We go back to this potential trend line here, looking like about 78 plus. And again, technically rejected, but I think you give it a couple of days, and I think, in my opinion, we see Roku back above this 50-day moving average on the weekly, because on the long-term time scale, time frame, however you want to say it, we technically have more room to run. Let's look at the pivot points real quick. I'll let you go. So you can see next pivot point of resistance here on the weekly would be just a touch below $80 a share, which again, I'm looking for about 78 in the short term. And on the daily, you can see we basically topped out almost approaching that next pivot point of 70.79. So that seems to be the level. And in my opinion, once it gets above that pivot point, it would also be getting above basically the moving average on the weekly, and it would be approaching the moving average here on the daily. And now we have all of these price targets, price levels, excuse me. You have all of these kind of price levels just basically diverging on each other here between like this high 70 and mid 71 range. So that's why I'm saying, if markets don't pull back, in my opinion, I think it gets above 71 plus, gets above the resistance levels, gets above the moving averages, and then you're going to see another pop up like this right here. Technically, in my opinion, that's what should happen, but we'll see. But anyone who got interested in it from our videos here back in February and the end of April with these earnings, and you were stepping in and you just kept adding to the position on the dips, like we always say, if we like it at 64, we should love it at 54. We should love it at 49, wherever it went to. So anyone who stepped in and kept adding to the position here, and now you're reaping the rewards of the rebound, congratulations, great call, and I wish you the best of luck. And of course, if you miss this little rally, as I said, if we do have maybe a red day coming up soon, I would potentially consider buying that dip there in the high 60s and trying to run this back up to the trend line into the high 70s. But that's pretty much it, so I'm going to end it there. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.